5 months ago, I put out a video titled The Top 3 Underrated Stocks to Buy Right Now. What were they? One of them was Etsy, which was priced at $80 a share, has since then gone up to 130 plus, and is now included in the S&P 500. An amazing stock. The second one was Fastly, which was priced at $34 a share and has more than tripled since then. An amazing run. The third one, though, is still underrated. Peloton was the third stock on there, and it was priced at $42 a share back in May on that video, and is staring $100 in the face as earnings are upon us tomorrow afternoon. Now, if you want to see a live reaction of that, make sure that you're subscribed and hit that notification bell, because we will be going live at 3:45 p.m. Eastern time to get my reaction of Peloton's earnings. It's going to be a good one, I think. So why is Peloton still underrated even though it's doubled since May? Well, there's a couple of things that we need to consider here. Peloton isn't just a bike company, and I think that everybody tries to peg this into a corner here, but that's just not the case. It's just like Tesla, where as people consider Tesla a car company, and those of us who really know Tesla understand that it's not, and that it's actually a tech company. With Peloton, it's a fitness company. It's not just about bikes with them. Not only that, but it's a fitness company that we can take advantage of at home, which we all know that the Rona-19 is not just something that has to do with the disease, but also the amount of pounds that we've gained since all of this has started. Therefore, many people feel like they need something like Peloton in order to continue to keep the weight off or start to lose weight, and they can still do it within a community and not get themselves sick. Speaking of community, I got some really staggering numbers as far as Peloton's concerned. They're expected to have over 1 million connected users now, which is an incredible feat and is a 104% increase from this time last year. Now, getting back to Peloton not just being about bikes, first of all, let's just cover those bikes real quick. They have two different types. One is a cheaper, more basic version, and then they have the Bike Plus, but they also have treadmills as well. They have the Peloton Tread and the Peloton Tread Plus there, but there's also rumors of them coming out with a row machine in early 2021. So they're continuing to expand on the bike and just be more than just a bike company or about stationary bikes. This goes much further than that, and let me explain this a little bit further. Selling stationary bikes or treadmills or equipment like that is one thing, but Peloton's figured out how to create consistent recurring revenue, and this is the lifeblood of their business and how they have grown to be so huge. And this stat that I'm about to throw at you right here is the most staggering part about Peloton and what makes them so valuable, and why I still say they're underrated, and why they're going to continue to grow, and while they're not going anywhere. There's a lot of arguments out there that, yeah, well, once the vaccine comes around and people will start going back to work, things get back to normal, Peloton won't become as relevant anymore. People will go back to public gyms. That'll become more of a thing. But just as remote work is here to stay, so is remote working out. And the number that I'm looking at here right now is the churn rate. So for those of you who either know of or have been a part of a subscription service, the churn rate is basically how much of a revolving door is your business? Are you bringing people in as fast as they're going out? What's the deal here? And Peloton's is at 0.5% is what their churn rate is at. That is an unbelievable number. They are keeping all of the people that they bring in, which goes to show you the value of the product that Peloton brings and the value of their classes as well, which is where all the money actually gets made. I mean, to have 1 million plus subscribers at $39.99 a month or that $12.99 a month app, it is an incredible number when you think about it, and they're only going to continue to get bigger, especially when you think that right now their equipment sales are 80% of the revenue and the recurring revenue is at 20%. This means that the recurring revenue is going to surpass that number. There's going to be a shift when recurring revenue starts to take over those equipment sales, and I think that that's going to happen very, very soon. Now that I've thrown all of that at you, those are some pretty good stats, right? Some really good numbers. Peloton has a bright future ahead of it, but there's still risk here. Peloton's supposed to come in with earnings tomorrow afternoon that are estimated at 10 cents a share. Now, I think they absolutely obliterate that number, but I think a lot of other people do as well. So I think that the price has started to be inflated as such. And so what's going to have to happen here during earnings is that Peloton's going to have to really blow people away. Everybody kind of had a feeling that Zoom was going to beat earnings back when it ran $150 a share overnight. But I don't think that we're going to have a similar reaction here with Peloton, like I said, unless we absolutely get surprised. It's not a surprise that they will beat, but what will be the surprise is just how much that they beat. If you bought into Peloton back when I said it was underrated back in early May and have doubled your money since then, it may make sense to start selling something off. Maybe at least the money that you put into it, so that you're at least playing with house money at that point. You minimize your risk, you at least make sure that you're taking care of your initial investment and you're letting your profits run. I mean, there's still other things to consider here as far as the earnings report is concerned. Just because they beat a certain number doesn't mean that the market's going to react accordingly. Some of you out there who may have purchased a Peloton product may have experienced an 8 to 10 week delay from the time that you ordered it. And this insane demand was a problem for Peloton in the second quarter when they voiced that they were having some problems keeping up with it. And so we're definitely going to have to see how they have been able to adapt and create more efficiencies within their system in order to get this product out quicker. If they were able to do that, then that's going to be favorable for investors to consider buying this even more. Look, the bottom line is this. Earnings are risky, and I do think that Peloton has a bright future ahead of them. But in the short term, if you haven't trimmed off anything, it might be a good idea to do so. But also keeping some shares just to see what it might do after earnings could also be a really good idea. I had the same strategy going in with Zoom. I sold off most of my position. I kept shares in there that I felt like I could afford to lose, and then let come what may. But and obviously it paid off. Sometimes it doesn't though, and so I want to make sure that you guys understand exactly what is at stake here. Peloton's worth investing in for the long term, but you also got to make sure that you're managing risk accordingly. And so as long as you do that, I think you'll be just fine. I'm still very much a fan of Peloton. I think they crush it, and I'm looking forward to seeing you guys tomorrow, again, 3:45 Eastern time. And give me your opinion. What do you think that Peloton's actually going to do tomorrow? Are they going to beat? Are they going to go crazy? Are they going to have a Zoom-like move? Or are they going to sell off like everything else has over the past week? Let me know in the comments. And if you want to see more content, just click on one of these videos over here. Please like and subscribe. As always, folks, I will see you all before the bell. And B. Smith is out.